Kurt, thanks for joining us.
Thank you. I'm sorry to be a little late, Peter. Had the wrong link, but that's how it goes these days.
Yeah, well, people of our young age, we sometimes can get the technology mixed up. But fortunately, the people you work with are really good at picking the tech companies that really have a lot of potential, don't you?
That's correct. That's correct. I'm glad they are.
Yeah, and I'll tell you what. I recently heard one of your guys address a conference where I was doing a presentation myself, and the one thing I found fascinating was he said that, okay, our funds have exposure to tech companies in the digital space, but he also made the point, which I think shocked a lot of people, and that was, he said, the digital age is in its infancy. And that kind of staggered me.
Yeah, that's an assessment that I think has a lot of validity. And it's funny, coming from me, I don't know if you remember my background, Peter, but I was an electrical engineer in another century. And so I've been interested in tech for years. So to me, the digital age is my whole career. And yet I really do see what they're talking about. There comes a point in the future where not only is everything we work with digitized and connected, and this might be a little scary, even at some point our bodies will be connected and digitized. So yeah, I think we'll look back on 2021, so the people younger than I, and think it was pretty primitive back here.
Yeah, I gotta say, the thought of your body and my body joining, Kurt, I don't want to go there, but I just prefer this technical connection we've got right now. Now look, for people, well, I should explain, WCM is a Californian-based fund, Laguna Beach, California.
Right.
Kurt was once upon a time the greatest surfer in America. I'm making that one up.
But one of my neighbors was, actually.
Okay, you can name names if you want to. But WCM has come to Australia about a little less than 4 years ago. They've got two well-known listed products. One is a LIC, that's WQG. Another one is virtually an ETF called WCMQ. And they've performed fantastically since they've come to Australia on the Australian Stock Exchange. And they've got another product, which we'll talk about later in the presentation. But I think a lot of people need to understand the history of WCM and its investment strategy, because it's quite a unique investment strategy. And when I tell people that in particular, you care about the culture of a company, people are really fascinated in that. But why don't you just give us a part of the history of the company and the investment strategy, Kurt?
Sure, great. And I'll just start by making a connection to what you just said. The history has a different story, but nowadays we say that WCM stands for Why Culture Matters. And it really is the history of our firm that has led us to that conclusion. The firm was founded over 40 years ago. The original founder was what I sometimes call a solo act, who made all the decisions, made all the money, owned all the stock. And you can guess that the culture that is born out of that kind of an attitude tends to not include a lot of other people. And so talent would get hired because you need somebody to do the work, but then it would quickly find out it didn't have a place to go and would go out the back door at another firm, start their own. That happened numerous times until my partners and I were able to buy out the original owner in the late 90s. And we made a promise that we were going to build a culture that was different. Most of the time that meant doing things differently, but the objective was to say, we not only want to attract great talent, we want to keep great talent and let great talent do great things. And to do that, you have to share the wealth, you have to be transparent, you have to push equity down. So from one owner in 1976 to 4 owners in 1998 to 34 owners at WCM today out of a total of 70 people. That's a lesson that was learned in fits and starts. But the thing that got us, I think, really going was realizing that if that makes such a huge difference in people that would leave our company, people that would stay with our company, it's got to make a difference everywhere. And then when you look around, you find out that almost everybody that is a great investor believes that as well. So we started with US domestic products, and then in the early 2000s, branched out to international and global. And like I said, now 70 people, about 4 different offices in the US, but the main one is Laguna Beach, and happy to have a great presence in Australia.
Okay, now tell us what is so unique about your investing style. I should actually say to people watching it in our financial planning businesses, we have you guys and we have Magellan, because you're both very good fund managers, but you invest differently. And that's why we like having 2 different styles of investing for our financial planning clients. But tell us about what your investing style is.
Yeah, thank you. I think there are 2 main things to consider in our style. It has to do with what we think is important in a business that's going to make that business grow and give a return to its investors, which is, of course, what we're trying to achieve. The number one thing is you do have to think about competitive advantages, but we like to say you have to think of them differently than most people. It's pretty common to talk about a competitive advantage, to have one that's large. In fact, Warren Buffett gave the old moat metaphor to this thing years ago, and now you see it at Morningstar and everywhere else. What we think is important is not necessarily a big competitive advantage, but one that continues to get stronger. And so that's the number one principle of how we invest. We're trying to find businesses that are on the rise in terms of their competitive position, and even maybe more important, if you will, in terms of protecting the downside, which is something we do very consciously and very well. You do not want to own businesses that are losing their edge. So the bulk of our research is spent on it, trying to understand, how do you tell that a competitive position is strengthening? How do you tell that it's weakening? And then the next thing that connects right to that is, if you can answer the question, how do you tell that a competitive position is strengthening? The next question is, how do you tell if it's going to keep strengthening? If it's going to do that, not just for a year or 2, but will provide a partner in a business for a decade or more, if you can. And we think the answer to that is, how does the culture fit in to that company's strategy, to their advantage? So the big idea for us is find a competitive position that's getting stronger, and find a culture, which is basically just the behaviors of the people in that company. Find a culture that supports that competitive advantage and helps it to continue to grow. And what you end up with here is a business that outdoes expectations, because these are not factors that are found in a DCF model. These are not factors that are found in any database. These are about people and their behaviors and staying ahead of their competitors. That's the kind of businesses we want to partner with.
All right, Kurt, so 2 questions on that. The first one is, and when I talk about your interest and care about culture, people instantly say, people say to me, well, how do they do it? And I say, well, they've created their own IP, their own basically filters for culture, but you explain that more. But secondly, I think I want to give us an example of a company that you thought was a good company, you might have made money out of it, but over time, the culture filters said, you got to drop this company.
Yeah, one that comes to mind is a company out of the UK called Reckitt Benckiser. Reckitt Benckiser has been an interesting history for us, with some cultural ups and downs. And quite honestly, we've had a lot of learning out of that experience. Years ago, the company was extraordinary at acquisitions and consolidating in the home healthcare businesses and the products that go along with that. They had an interesting departure by both the CEO and the CFO within a few months, unexpected. Initially, that caused us to be wary of what was going on. So we actually did sell the position when we thought that the culture was actually damaged. A few years later, a new CEO came in that we were quite positive about. We gave him some time to actually work out how he was going to run the place, thought that we had a pretty good sense of it, rebought Reckitt Benckiser, made some money at it, but then found, to our surprise, that the new CEO quit again. And then we said, this is 2 times, we've got to figure this out. We dug pretty deep and found out that there were issues all the way at the board level that we aren't comfortable with. And so the idea of vetting the culture, not only in the leadership of the people, but in the people that pull the strings as well, has been the new learning lesson from all of that. So that's a company that we made some money on, but we've ended up not owning it because the culture's not as healthy as we thought it was.
So how have you created a filter for culture, or is it done one-on-one every time? But you must have at least a checklist of what is critically important.
It is mostly, though, one-on-one conversations. We have a dedicated culture analyst team here at WCM who feeds information into our normal business analysts, but all of it is based on extensive conversations. The tools that we use that are beyond that, or we have survey companies help us to understand by asking peers. Even in our conversations, some of the most enlightening information comes from talking to competitors. But the idea that we're looking for are three. We really are concerned that a culture be what we call adaptable, for one. We've found out from academic research and other places that cultures that have an external awareness tend to have much better business performance than those that are only internally aware. So this is an example would be to talk about a business that understands who its competition is and what they're doing, as opposed to the internally aware culture that simply says, we can do better than we did ourselves last year. It also needs to be very well aligned with what the business's strategy is and their competitive advantage. The classic example I've used with you before, Peter, is that the culture that's right for a retailer like a Costco or something, where the adage happy employees mean happy customers mean happy shareholders, where that prevails, that's not necessarily the right culture for an industrial company like a railroad or something like that, where the goals of the company, the competitive advantage it has, are different and need a different type of people. So we want them to be aligned as number one. We want them to be adaptable. That's number two. And the third one, we want to find out that the culture is actually permeating the organization. Remember, we talk about culture as the behaviors that the people do, the things that motivate them. And sometimes around here, we say it's what the people do when the boss isn't looking. If that culture is right for the business, then we've got something. If it's strong throughout the organization, it's adaptable, and it's aligned. And that's what we find is the secret to finding things about the culture that we want to know.
Well, thanks, Kurt.